envelopes, those debit cards. Now, payment status not available. If this pops up for you, that means one of two things. It either means it's not yet processed, so hold tight, or you're not eligible. So this website tracking tool, it basically updates.
Watt said the negotiations between the legislature and the governor delayed the timeline of the payments.
Exactly who would get the rebates and how much would they be. And so they finally came to a reasonable conclusion, but it was too late to distribute this money in the summer.
Depending on your income and your tax filing status, you could get anywhere from $200 to $1,050. You must have filed taxes in California in 2020, and you must still live in California now.
There are about 3 million Californians who did not file income taxes.
According to the IRS, if you collect certain benefits, including SSDI, you may see the money starting today. The IRS says it received the data it needed from the Social Security Administration last week for people receiving the following: Social Security retirement, survivor or disability, supplemental security income, and Railroad Retirement Board beneficiaries who did not file a 20.
Here is an important fourth stimulus check update, information about the Social Security benefits, and an increase in SSI and SSDI. Here's the most important information that I want you to know. November checks are beginning to go out. Monthly checks are beginning to go out this month. Inflation relief checks will now be worth up to $2,000 for eligible households. And the Federal Reserve has also officially announced a new plan to tackle inflation. The plan would also help avoid any economic recession. To help California residents battle inflation, the state has also started sending out the middle-class tax refund payments early last month. So some residents are still wanting and waiting for the one-time payments, and the state has issued a new guidance as to when they will receive them. Middle-class tax refund payments have been sent out to Californians to help with the rising price of gas and the cost of living adjustments. Californians can expect to receive $200 to $1,000 as well. According to California representatives Jim Costa, for instance, the first round of middle-class tax refund and payments have been sent out last month on the 7th and this month upcoming next on the 25th. And those who are eligible for relief will receive their paychecks via direct deposit or mail debit card and stimulus checks as that. The State of California Franchise Tax Board has also explained on its website that if you're eligible, you will automatically receive a payment which is expected to be issued between October of this year and January of next year. First of all, Californians who received the first of second going to the stimulus are also expected to receive the middle-class tax refund direct payments as well, and this is all through direct deposit. The direct deposit recipients who have changed their banking information since filing a tax return will receive a debit card, and it will be mailed to you in December and also in January of next month. Now, the Federal Reserve also approved a fourth straight rate hike of 0.75 of a percentage point this week as part of its battle bringing down the soaring inflation that is affecting so many households. The supersized hike, everybody, brings the central bank's benchmark lending rate to a new target range of 3.75 to even 4%. Now, that's the highest the Fed has raised interest rates since January of 2008. The decision came at the end of policy meeting of the Federal Open Market Committee and marks the Fed's toughest policy move since the 80s, and it will likely just deepen the economic pain for so many more people. And so in a news conference following the meeting, Fed Chairman Jerome Powell said, "The inflation picture has become a lot more and more challenging over the course of this year, and this means we have the policy to be more restrictive, and that narrows the path to a soft landing." Now, Powell also reiterated his decision and his commitment to bring down inflation and his stance that persistent entrenched inflation will only cause greater economic pain than a recession. So everybody, the Fed officials have introduced and included the new section in a statement. The Federal Open Market Committee anticipates that ongoing increases in the target range will be appropriate. It's in order to sustain a stance of monetary policy that is sufficiently restrictive to return inflation to a 2% over time. Now, the new language could also pave the way for an eventual easing in interest rates, as it acknowledges that monetary policy may also be effectively cooling the economy, as economic data indicates strong growth. However, some inflationary pressures are easing. Wages and salaries rose by a percentage point in the third quarter, down from also 1.6% in the second quarter. And through it all, the job market has remained tight.
1% inflation rate, that the cost of living increase for next year for Social Security beneficiaries would be 10.5%. If so, that would be a record high. What that means in practice is that the average check would go up by about $175 a month to a monthly amount of $1,668. But there are some wild cards to this.
So guys, economists are now warning that lawmakers of a recession. Which may lead everybody to rising poverty in many unemployment states. Now, the IRS has just released new details on the next batch of checks that they're sending out, and right now, thousands of dollars can be claimed by many low-income households. But there's a deadline to receive the stimulus check, so be sure to continue watching this video because we get into more important information about the stimulus payments. Like this: if you receive a letter from the IRS, don't ignore it. According to CNBC, you could be one of 9 million people who the tax agency says can still claim thousands of dollars in stimulus and the child tax credit payments. You have to act quick. The IRS said it began mailing letters in October to reach millions of people who haven't claimed benefits like the stimulus checks, earned income tax credit, and the child tax credit. And according to the agency, people who are eligible only have until November 17th to claim the money. During the massive stimulus effort to help keep households afloat and financially afloat during the crisis, the IRS relied on tax returns, everybody, to determine eligibility as well as where to send the payments, as tax returns include bank account information or home address for mailing the checks. But about 9 million Americans have yet to claim the stimulus funds because they just didn't know and file a 2021 tax return. The letters will let people know that they may be eligible and how to claim the money. The IRS said the 9 million people who were identified by the Treasury's Office of Tax Analysis are those who are not required to file taxes because they have very low incomes. Single taxpayers under 65 years of old typically don't have to file a tax return if they earn less than $12,000 a year. So while that goes up to $14,000 for some people. The 2021 Recovery Rebate Credit is the official name of the third round of payments authorized by lawmakers, and it's provided up to $1,400 per person, including qualifying children claimed on a tax return. Let's not forget that means a family of 4 could qualify for up to $5,600 in stimulus money. Under the law, the full amount is available to single taxpayers who earn less than $75,000 and married couples who earn less than $150,000. Payments are gradually phased out for people who earn above those thresholds. In this year's hot pace of job creation may have slowed slightly in October, but unemployment is expected to remain very low as companies continue to deal with worker shortages. According to Dow Jones, economists expect about 205,000 jobs, everybody, that were added in October, and forecasting unemployment rate stayed at 3.5%. That compares to job growth of 263,000 in September. Wage growth was expected to have cooled slightly, with average hour wages gaining 0.3% in the month, or 4.7% over a year ago, down from 5% annual pace in September. So for the Federal Reserve, let's talk about this. Economists say the type of job growth that's expected in October is not going to sway the central bank from its aggressive rate hiking path. Jerome Powell said Wednesday that the Fed could reduce the size of its interest rate hikes, but it may need to raise rates to an even higher than expected level just to stop inflation. Economists expect that rate hikes will eventually slow the economy enough to crimp the job market up. So one economist told CNBC that the Fed is now targeting the labor market and is willing to go even further on this. Recent data shows job openings surged